Hey, welcome to this week's edition of Professional Insights, brought to you by the National Referral Network and hosted by two incredibly handsome bald guys, both of whom are named Mike. Here we are. Good morning to you, sir.
Good morning, Mike. How are you?
I am well. I am well. And as we're aware of, the purpose of this presentation is to share professional wisdom, expertise, and you guessed it, insights so that professionals of every persuasion can benefit. And we got another mic here today. It's three mics for the price of one. What are you gonna do? We got Michael, are you in New York? Are you on? I know your office is on Wall Street. I always like to say that because I'm sort of impressed that you have an office on Wall Street.
The answer is yes, I'm in New York, and yes, I'm on Wall Street
You're
currently.
on Wall, so you can look out and you can see people jumping out of windows. Not a bad day. I mean, what can you see from Wall Street?
I can see out of my window the steeple of Trinity Church,
Oh,
Okay.
nice.
and
Wow.
all there are graveyards on both sides of the church, and Alexander Hamilton is buried right there.
So the analogy, jumping out the window analogy, is still kind of holds. That's where they go. Okay. Well, Michael, we got a lot of questions for you. I'm just going to kick this off and ask you, sir, so you are a tax professional there in New York City. What is it about you and your firm that makes you guys unique? What makes you put on the Superman cape?
Well, I think that our structure makes us unique. Theoretically, not just theoretically, but practically as well. I'm a firm within a firm, so I have my own firm, but I'm part of a larger firm. So what that allows me to do is to be directly involved with, at a high level, with all of my clients, both on a relationship basis as well as a service provision basis. So that, in many cases, you have, like, for example, a much larger firm where everything is handed off to a staff person. And I'm not going to say that that's bad, but in this case, because of our structure, I actually stay involved in all aspects of my clients.
Okay.
So, so Michael, you and I have known each other for quite some time, and it's one of the things I've always appreciated about you is that value creation. And with a lot of things that are changing with standard deductions and just the overall lack of knowledge of the tax code, what are the top mistakes that you're seeing when it comes to tax preparation and tax planning? And really, what's the difference between those two?
But let me first talk about what the difference is between those two. Okay. The difference is tax preparation is as important as it is, and it's very, very important, and there are good ways to do it and not so good ways to do it and so forth. But the difference between tax planning and tax preparation is once you start doing the tax preparation, in most cases with most issues, it's too late to do, to save money on taxes, with the exception of perhaps contributing to a retirement plan or an IRA, that kind of thing, which can be done in the year after the year that's being filed. But there are so many different aspects of the code that apply to many taxpayers. Some of them are my clients as well. That can only be planned for in the year that we're reporting on, before the end of the year, so that in those cases, and in many cases, as far as I'm concerned, we can save our clients significant amount of money. Whereas once the year is over and there's no more planning to be done, that ship has sailed.
So we're talking, quarterly taxes. When should somebody do that, Mike? Should they talk to you? Like, obviously, we're preparing taxes the first of the year or thereabouts,
Right.
but should they start talking to you that early, or is it second quarter? When should somebody come talk to you about tax planning?
I think in most cases it'll be like second quarter, third quarter, fourth quarter,
Okay.
and anywhere in between if there's an event that takes place, such as purchasing a business, sale of a business, sale of a home, sale of, there are all kinds of transactions that take place during the year. And when those transactions occur, it shouldn't wait until that quarter's meeting, if you will, to determine what kind of quarterly estimates people should pay in. And ways, it's not just a matter of looking at it and saying, well, based on this, you now need to pay in this much in quarterly estimated taxes, but how do we mitigate that? How do we minimize that before we decide on how much you should pay in quarterly estimates?
So is that the differentiator, Michael, between a tax professional who's really at the top of their game and one who maybe, I don't know, just sort of phones it in. What if somebody's looking at hiring a professional, what questions should they be asking so that they can differentiate one from the other?
Okay. There are several things I would ask or suggest that people ask. One is, how many years of experience do you have? Um, are you licensed? Have you ever been disciplined by a disciplinary authority, et cetera, et cetera? They should also ask whether the tax professional has expertise in a particular client or prospective client's situations. So it could be someone who's in the real estate business. Are you familiar with something called 1031 exchanges? That kind of thing. And how much experience do you have doing that? Those are some of the questions that people should ask. Ask about the size of the firm, how many, what's the depth in terms of staffing and all of that. I think it's important for people to know that. So, in the event that I'm not in the office or I can't take the call, that someone else can handle it for me.
So, Michael, I mean, a lot of the questions, they seem to be logical to us, right? But some people just don't know they don't know. Yeah. But in addition to those questions, what are some of the things that you see on the horizon that you might bring up to clients that are changing in the tax laws that they should be prepared for? They just don't know what to ask.
As you both know, and as many people out there know, the tax law is ever changing. Whether there's a new law passed or not, there are tax regulations. There are all kinds of refinements of the tax law or the tax code that take place on a regular basis throughout the year and every year. And unless you're tuned into all of what is happening, which people in my profession and my position need to be in order to work for our clients in the best light possible, then people aren't going to know those things. But we need to know those things so that we can then reach out to our clients and say, hey, did you know about this? And if you don't, maybe we should sit down and talk. Maybe we should have a phone call or a Zoom call or whatever it may be. Because I'll give you an example, if I may. Back in 2017, when the new tax law passed, and there have been some refinements since then, and so forth. There was a limit on the deduction of state, local income, and property taxes to $10,000 per person. Many people are very high net worth and they live in high tax states. They're paying way, way more than the $10,000, and they're losing the difference. But many states have now implemented a law that basically says, hey, if you have a pass-through entity, which could be an LLC partnership or an S corporation, you're now allowed, you have to make the election, you're now allowed to pay the tax at the entity level, and that mitigates the loss of the deduction on the individual level. So instead of being a $10,000, it could be $60,000 or $100,000 that they're actually getting the benefit of, and a lot of people aren't aware of that.
That's huge.
So we make them aware of that and say, here's something that you should think about. If you want to make the election, it has to be done within a certain period of time.
And with all the changes in tax law that were either on the table or that have been enacted, are you also making clients aware of, well, I don't know, how to stay out of the IRS's crosshairs? Because we've heard that there's actually been additional funding that's been given to the IRS, and has that put more auditors on the street? And you get that letter in the mail, and it's like, are you talking to clients about these kinds of things?
Well, yeah, to some degree, but I would also like to emphasize that, yes, they've gotten additional funding, IRS has.
Yeah.
The time that it's going to take to hire people and train them is significant. For an auditor to actually do an audit properly, they have to know the law better than anybody else. And, I've been doing what I've been doing for 40 plus years. And if you're hiring new people, and even though some of them may be CPAs and have some experience, they don't know everything about the tax law or how to conduct an audit. So I think that the impact of that funding in terms of audits is further down the road. Now, going back to your initial question, is how to advise clients on how to be audit proof. I don't think there's such a thing as being audit proof.
Okay.
Because a lot of audits are randomly selected. It's not because a particular item is on a tax return or not on a tax return.
Okay.
So, there are some that obviously are and clients that are taxpayers that are audited for a specific reason. But in most cases, I would say the majority of them are random.
Okay.
And they've got algorithms that they use to determine.
Okay. So you're saying I can cheat for a couple more years, and then I gotta tighten it up. Okay,
No,
good.
no, that's not what I'm saying. Let me just touch on that for one more second. It's like, so if I tell a client, look, whatever we do, we're going to use the law to our advantage to get the best bang for the buck out of it, but it's all going to be above board. There isn't anything that's going to be illegal. So,
Right.
So Michael, how do they know that, right? Where do they get information other than just calling a tax professional, right? Because a lot of people just go to H&R Block, which is a different service, right? It's a pure tax prep.
Right.
But where does somebody get information on these things that they can take advantage of within the tax code that they don't know that they can even take advantage of? Like, where do they get that valid information from?
Well, they're going to have to get it from a tax professional, most likely, because the average person out there is not tax knowledgeable. They're not going to know where to go. I mean, they can go onto the irs.gov website and search it, but that basically what the irs.gov website tells people is this is what the law says and this is what you need to do. It doesn't provide them with any tax planning.
So as a W-2 employee, right? There's certain tax code's huge. Is somebody that has just a W-2 employee, can they participate at the same level as an LLC and an S corp? I mean,
it's certainly far more difficult because even some of the investment related expenses that people used to be able to deduct, or the miscellaneous itemized deductions, those are gone.
Yeah.
So other than and even someone who is claiming the standard deduction, they can still claim $300 per person of charitable contributions in addition to that. But it's very limited on what a W-2 employee can do if they don't have some other kind of entity.
Yeah, and I've gotten that question a lot from high income earning professionals over the years. Like, what can I do? And I've given them the same answer. Like, not much, but talk to your tax person. Michael, as we wrap up here, one question I have is how has your membership in the National Referral Network, how is that helping you become better at what you do, and how is that elevating your business?
That's an easy one. That's a softball question, Mike. Anyway, no, I have been part of the National Referral Network for, I don't know, some time now, probably a year or more. And what it provides me that I can then offer to my clients is to, when I'm having a discussion with a client, they start talking to me about things like asset protection, investment management, estate planning, and so forth. I say, well, look, I can give you some general guidance, but for more specific guidance and advice, we need to bring in someone who does that all day long. Whether it be a financial advisor, a financial planner, an estate planning attorney, and other types of attorneys for contractual issues as well, that I'm part of this network and I know these top quality professionals that I can introduce you to that would become part of your team, because no one, I don't care who says this, but no one can operate in a silo and provide all those services.
Right.
No one.
And if you are and thank you, Michael, for that. And if you are a professional watching this, you'll see at in the lower left-hand corner, there is a link to the NRN America website. We really encourage you to check it out. It really is that rising tide that raises all ships. It's professional. It's a professional community, and we're all linking arms for everybody's benefit, because we all realize we cannot be all things to all people, and we shouldn't even try.
Absolutely.
Any final thoughts, Michael?
No, I mean, other than to say thank you for having me here, and I encourage people to get the best advice that they can, and don't try to do it all on your own, because if you're not a tax professional, you don't know where to go, you're going to miss things. So I would say that that's really, really important from the perspective of being a tax professional. But also, I would just add to that to expect that if you're working with a tax professional as part of the National Referral Network, that you're going to have available to you all this other amazing expertise. And so, why not take advantage of that?
I love it.
Why not? Indeed, that's what I say. Well, Mr. Mike in Utah, any final thoughts from you before we say sayonara or so long or hasta
All of the above.
I don't know too many. I don't know goodbye in too many languages. So.
Michael, thank you as always. Really appreciate the time. If you guys want to connect with Michael, he's on all the social networks, LinkedIn. Michael does a lot of podcasts. He's getting out there quite a bit, a lot of value. But please connect with him on LinkedIn, social media. Go to the National Referral Network, like Mike says. If there's anything that any one of us can do, please reach out to us. We're happy to answer any questions. But until then, thank you, Michael. Thank you, Mike. And we'll see you next week.
And we will be back here next week. Thanks, everyone. We will see you again.
Bye now.